Bitcoin's 3% slip is minor. The US just axed the $800 import loophole. Inflation plus tariffs. Can your wallet take the next hit? Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 30th, 2025. I am Nova.
I am Satoshi. Bitcoin dipped nearly 3%, settling around, what, $108,500.
That's right, and Ethereum wasn't too far behind it.
Okay, yeah, it slid about 2.8%, roughly $4,360. Solana actually took a bigger hit, down around 5%, I saw.
It did.
And even, the meme tokens, Dogecoin, Shiba Inu, they also saw slight dips. Seems like investors were definitely feeling cautious.
Yeah, that caution you mentioned, it really showed up in, well, a flight to safety. You saw dollar-pegged stablecoins like Tether holding rock steady at $1.
Right.
And its trading volume was massive, like $106 billion. That tells you a lot about where capital was moving, you know.
Seeking stability.
Exactly. And what's interesting is how crypto really acted like any other volatile asset class here. It was reacting directly to these broader macroeconomic factors, not really something unique just to crypto yesterday.
Okay, let's unpack those macro factors then. What specific global economic news was tightening its grip, sending those ripples through crypto?
Right. There were basically three key things creating headwinds. First, the U.S. Commerce Department's PCE report.
The Personal Consumption Expenditures Index, right?
Yeah.
Like a key inflation measure.
That's the one. It showed core PCE rising 0.3% in July. That puts it at 2.9% year on year. Now, this was maybe a bit firmer than hoped, reinforcing that inflation is, well, sticky.
Okay.
And that caused Bitcoin and Ether to drop maybe 3-4% intraday right after.
And why does that specifically hit crypto?
Well, it makes traders brace for potentially tighter financial conditions. Think higher interest rates, less easy money, sloshing around, and that typically pulls capital away from riskier, more speculative assets, like digital currencies.
Got it. What was the second factor?
Second, starting August 29th, just yesterday, the U.S. got rid of its $800 de minimis tariff exemption for low-value imports.
Oh, right. The rule where stuff under $800 came in duty-free from overseas.
Exactly that. Now, that's gone. This policy shift, it could mean millions of e-commerce packages suddenly facing new taxes or fees.
So basically, that online gadget you were eyeing might cost you a bit more. Higher costs for consumers, small businesses maybe?
That's the potential impact, yeah. It adds a bit of, mild inflationary pressure, which, again, isn't great for speculative assets if it pushes the Fed to be more hawkish.
Okay, makes sense. And the third thing?
Third was some jitters around Fed independence. There was a court hearing about President Trump's attempt to remove Fed Governor Lisa Cook. It ended with no immediate ruling, but any hint of political interference with the Fed. Well, that can destabilize longer-term interest rates.
And turbulence in traditional markets tends to spill over.
Almost always, yeah. It just adds another layer of uncertainty for crypto investors.
Okay, so that risk-off mood, it can feel pretty grim. But what I find genuinely fascinating, and maybe more important long-term, is how underneath all that, there's this clear current of really positive industry building happening. Are these developments strong enough to maybe balance out those macro headwinds? Or is that just wishful thinking right now?
That's a really crucial question. And while, yeah, the macro factors are definitely powerful, these industry moves show this fundamental maturation of the crypto space that's just hard to ignore. So, for example, 3 major stock exchanges, we're talking Cboe, BZX, NYSE Arca, and NASDAQ, they've filed proposals with the SEC. These are for generic listing standards for crypto ETPs, exchange-traded products.
Generic standards, so that makes it faster to launch new ones.
Potentially much faster. It could cut the launch timeline from like 240 days down to just weeks.
Wow.
A decision is expected maybe late September 2025. If approved, this could open the floodgates for ETPs tracking, Solana, XRP, maybe even Dogecoin, lots of others.
Okay, that's big. What else?
Then you've got the U.S. Department of Commerce, specifically the Bureau of Economic Analysis, or BEA. They've actually started publishing official economic data, think real GDP, the PCE price index we just talked about, directly onto public blockchain.
Onto blockchains, how?
Using services like Chainlink and Pyth. This is really groundbreaking for enabling new DeFi use cases. Imagine lending protocols that automatically adjust rates based on verified on-chain inflation data. Super interesting stuff.
Yeah, definitely. And that helped Chainlink's token.
It did. LANK jumped over 5% right after that news broke. Shows the market sees the potential.
All right, and there was one more big development.
Yes. Finally, the Swiss asset manager 21 Shares filed for the first U.S. spot ETF for SEI.
SEI, that's the native token of the, say, blockchain network.
Correct. And an ETF, an exchange-traded fund, just makes it way easier for traditional investors to get exposure without holding the actual coins. But what's really novel here is their plan, if regulators allow it, to potentially offer yield through on-chain staking of the SEI tokens held by the fund.
Oh, interesting. So yield-bearing crypto ETFs.
Potentially, yeah. It really expands the menu beyond just Bitcoin and Ether ETFs, bringing these diverse altcoins into the regulated market. And analysts seem to think these altcoin ETFs have a pretty high chance of approval eventually.
Okay, so pulling this all together.
Yeah.
What does this mean for you listening? We're seeing this really fascinating mix, aren't we?
Yeah.
Short-term caution driven by those global macro factors, inflation, policy shifts.
Right.
But at the same time, there's this strong, undeniable long-term progress. Crypto is getting more integrated, more innovative within the broader financial world.
Exactly.
It's just a powerful reminder, I think, to manage your risk day to day, but also keep an eye on that bigger picture. Stay informed, because while the price swings can be jarring, the underlying trend seems to be one of a maturing and increasingly intertwined market.
Absolutely. And, this raises a really interesting question to think about. As we see more official government data hitting blockchains and more diverse altcoin ETFs becoming available in traditional markets, what kind of new, maybe surprising financial products could emerge next? Things we perhaps can't even really imagine today.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.